I want to talk about this move in oil, a beautiful sell-off that's coincided really nicely with a news narrative that did not play out how people expected, and that is a lot of the time what results in these beautiful moves. So really high level, real quick, just want to say where we're at. Obviously, with the Iran war, we have these big bullishness in oil. Everyone's expectation is more bullishness. After the first rip, we create this weekly candle with a very long wick on either side. And this kind of reminded me, this is gold. This reminded me a lot of gold. If we go on gold on the weekly, exact same thing over here where we have a very long wick on the upside, very long wick on the downside after a big rally. And then price is just in this range. It's drifting up to a premium of the range. Eventually, this is when the Iran war news came out. Over a weekend, everyone was super bullish on the Sunday Open. They said, I'm just going to buy long gold at the open and it's going to go up. Everyone gets long and it sells off from a deep premium of this range down and takes out the sell side. And I don't know, it just looks very, very similar. The same kind of thing, very bullish news. I think there was a tweet from Trump saying something about a deadline at the 1800 Open today, which is right when we had the sell-off, and basically making some pretty obvious threats as well. So it should be very bullish for oil, and that coincided beautifully with the technicals, which I'll show you right now. So these technicals are rather clean. I've been actually watching this all of last week, thinking that this is what I was seeing, and it's turned out to be exactly correct. We have a very obvious first stage, which is when you have a market maker model framework. You have the origination of it. You have the first stage putting in a intermediate term low. We then break that swing high, get rid of this line. Once we break this swing high, this is the first stage with a short term low, intermediate term low, break a structure. First stage has now officially played out. After first stage comes second stage. So what second stage is usually a relatively shallow retracement and then another rally. Once we break this high right here, second stage has now played out. After second stage, you're looking for a potential reversal. And a lot of the time, those reversals are going to happen with a classic reversal pattern, such as a 3 drive. What do we see here? A 1, 2, 3 drives into the high. This is the final day of the weekly candle last week. Closing looking really, really strong going into the long weekend. Closing on its high, basically creating that bullish sentiment going into the weekend after we've just played out a second stage. We're looking for a reversal and we drop to the 4 hour. Next thing that stands out to me is, well, one, we're leaving a lot of smooth lows behind, like all through this range, heaps of smooth lows. We also have this key support and resistance place right here, multiple relative equal highs, and a perfect retest of it on this candle, which actually just spikes down there. It was down there for like maybe 1 or 2 minutes and then rallied straight up. So clearly engineered liquidity. We then have a long wick plus gap, so that's a bullish signature, and then we get the continuation. But you'll notice on this area right here, we get some different signatures. So rather than getting a long wick and then a failure to retest the midpoint of that wick, we actually do retest the midpoint of this wick. We actually go below it. So this indicates we're leaving relatively equal lows. We're actually engineering liquidity down here. We then get this very enticing rally, and everyone thinks, of course, oil's going up because of the war. As we rally, we then pull back, make a very, very long wick, which traders typically see as a bullish rejection. So anyone who's long through this rally and they see this long wick, from this wick being developed on Thursday all the way up till today, this is where they're going to put their stop. They're thinking, okay, well, I need to protect my position somehow. I'm going to put my stop loss below this long wick. And if price fails there, where is it going to go? Well, it's going to go to the next pool of liquidity, which is down here. The key thing is that we've had this enticing rally, engineer a really obvious pool of liquidity down there with a long wick. We have a clear first stage, a clear second stage, which is confirmed to have played out as we break this high. Then once it's played out, this is basically us distributing into the highs. We want to see a reversal. We actually get 3 drives in the daily, so 1 drive, 2 drives, 3 drives. On this time frame, it kind of looks like 4 drives, so that might have been a bit tricky if you got in too early. But what I want to break down is how I was actually able to identify the oh shit moment, which is a kind of a concept that I'm creating for myself to help me time the markets better. But a very specific moment in time today at the, well, in the PM session, that actually told me that price was ready to go. So you notice we have a lot of smooth lows through this range. We initially drop into the bits, then rally up, make a new high. So this is London last night. London makes a really obvious pullback low, and then it rallies and makes a new high. So this is going into the New York Open. This is 8 a.m., 9 a.m., 10, 11. The core of the New York session, we've just had this really obvious low put in and a nice strong rally into the highs. Everyone's super bullish. And there's the thing in the air about the deadline, which was right here. And everyone's got a lot of uncertainty, thinking that, and also thinking that, okay, well, this war is about to ramp up. This is going to be so bullish for oil. I'm just watching the 1 minute as well. Now, I might bring up multiple time frames real quick. I'll bring up the 15 on the right and the 1 hour on the left. But what I like on the 15 minutes especially is that if everyone's bullish, if you imagine we made this obvious low in the London session, everyone's super bullish, and this is the New York session, we're just sitting up at these highs through the New York session. Everyone's buying up here. Everyone is maybe putting their stop down this low. We then start dropping into the range. So anyone who's bullish, if they were buying, let's say someone bought here, if they thought that was a good price, they're going to think it's even better price to buy down here. They're going to think it's even better price to buy here. So we've been giving all of these buy the dip opportunities to dip buys when the expectation is it should be super bullish. We then get this nice rally from a discount. Everyone's like, cool, I'm confirmed bullish. Then a aggressive break lower. What you'll notice about this in the hourly time frame is that this hourly candle fails to take out the previous hourly candle high and instantly breaks lower. That's a key signature of a squeeze. How I recognize this as a oh shit moment is the fact that it is a failure swing. So I'm going to drop to the 5 minute real quick. I've got a pie in the oven, so I need to make this video before burning the pie. Pie as in meat pie for any Americans watching. So really obvious pullback, a big rally, and then break low. This is the oh shit moment because we've had the first the initial confirmation that people might be right, the initial moment where it looks like, there's still a bit of hope right here. So at the moment, as price is coming down through here, anyone who's long, they're thinking, oh, this is kind of looking dodgy, but there's still hope because my stop loss is down here. We then have this big rally. Everyone who was long, that's their moment of relief. That's the unanimous sigh of relief. Everyone's like, ah, oh, phew, I was, that was a close one, but I was right. Big rally. I'm so lucky. This is good. I'm going to add to my position. Then the aggressive breakdown combined with the failure swing, so failure to break this high, a failure to even take out the previous 1 hour candle high, aggressive breakdown. That's the oh shit moment. And how I use that, and I unfortunately didn't use it this time because I only saw the chart here, but that becomes the oh shit moment impulse origin. That's the impulse move that sent us away from this area where traders are now trapped. So you would just trust that price will not come back above this high. We then have this nice spike down to the closing of a very long wick. Once again, traders see that as a bullish rejection. So, there's still hope for them. And then we just roll down into it into the close. This is where I looked at the charts and was like, oh, wow, I want to be short really bad. What I want to see is we'll just put some sort of narrative, some sort of a rally that I can get short. It gaps down. I really wanted to get short. But my issue last week was that I kept on taking way too many losses just after the 1800 open because I had a strong idea of what should happen, but I didn't have enough information yet. And as you can see, like especially if we go on the 1 minute time frame, there really is not that much information right here. So I was like, I forced myself to not take this trade because although I really wanted to just short it, I also recognized that there wasn't that much information. And the reason I lost a lot of money last week was because of exactly this. I'd be like, oh, I think this is going to happen. And there would be just a few candles in the chart and I'd be taking trades. So I didn't take the trades, but what I really want to make this video just to point out is just how obvious this first stage, second stage, 3 drives reversal is, how to use the oh shit moment, and also how this reversal correlates beautifully with people being peak bullish, the same way that gold back here, everyone was peak bullish up here as well. The expectations were very obvious. Now we're breaking lower, but I do think this could actually sell off from here as well. Ultimate target down here, but we're already very extended, so it needs to be very. I need some very objective signatures to be taking a trade right now. But yeah, pretty keen to get short at some point. I like how we've been held as a premium since coming off this low. We did not retrace to EQ of the range, suggesting that we should be held in a premium. But yeah, other news. We've got crypto finally making its move. I added to my position just here at around 2083. What's really key about this is if you just go straight to the 15 minute. I won't do the full breakdown of this, but the one key signature, 2100 to 2020, this kind of area is a very obvious support resistance kind of zone. And you can see a price kind of bouncing around it, creating sentiment. But what's key about this particular time that coming through it is initially we broke down below it, spent some time below, but then when we rally up through it, what happens? It's happening at 1600 basically, so going into the close of the candle, gets a strong push through. It does not retest the hundreds. It kind of sits up there, very tight range. Then it gaps through this level. And the key thing I want you to notice is that we fail to retest this obvious support resistance kind of area on either side. And when price fails to retest an obvious area that people are going to be looking at, that a lot of the time suggests that it's not planning to come back until it's had its run. And we had that nice push up. So I'm still holding on to my swing position, although I also scalped along from down here and I closed it out up here. I want to add a bit more if we retrace, but at this point, my high time frame swing trade stop loss has been trailed up to here. I'm no longer doing the Hail Mary trade. I'm actually just going to lock in something and continue trailing the stock, but I do like what ETH BTC is doing. It is not as ripping as hard as I want. Like ultimately, I think that like I want to see ETH BTC literally go to the moon. But um like what I can see ETH BTC going like this. So that's why I'm actually short Bitcoin as well. So I'm bullish crypto, but I'm short Bitcoin, long ETH, but I'm way longer ETH than I'm short Bitcoin. So Bitcoin's just like as a slight hedge, just to play the relative strength play. But it does look pretty promising on ETH BTC, but I would have preferred that by this point we were at least showing some real intent of reaching up towards these highs. So we'll see how that plays out. But in the meantime, until ETH BTC gives me a really strong confirmation that we're bullish, which would basically be if we end up getting back up to around 0.04. At that point, I'll be looking to add into this position aggressively, including short BTC and long ETH. But until then, I'm just going to be managing the trades just how you normally would. Like if you have a big run like this, you take some sort of a partial and a premium of the range, you're moving your stop loss to the correct locations and looking to go from there. But yeah, yeah, realistic trade on oil. And I'm creating a filter. Well, not a filter, I'm creating a a workflow and automation where I can actually have my OpenClaw scanning for these kinds of situations and alerting me of what markets to look at, what the public sentiment and expectation is, and then I can look to see if I can fade that somehow. I could show it to you briefly, but basically just made a Discord page and it scans through my vault. So I've got a big old vault and I've got raw input through voice memos and daily notes, and then it scans through all that stuff and it helps me synthesize my thoughts, come up with ideas, create new automations and stuff. And that's a cool thing I've been working on at the moment. And I think it's going to be powerful as just a project to work on that isn't staring at the markets 24/7, because that was why I blew up my funded account last week. Is because I was coming to the desk every day, opening up Top TPX and sitting there ready to take a trade if anything popped up. And that's resulting in just forcing stuff. Whereas the way that I actually passed that account to start with was by not having any pressure. I was distracted with building, like learning how to use AI, building my Obsidian vault and getting some systems going. And then when I saw a really good trade, I'd be like, oh yeah, I'll open up Top CPX and I'll take it. And then I just close it afterwards, done. So that's really the approach I need to have, is just be super casual with it. And just, yeah, just take good trades if they show up. If they don't, then it's fine. But yeah.